What's up, guys? Welcome to episode 42 of the Block Exploring podcast, News Bytes. With me is Tommy, as always. And in this episode, we're going to talk to you guys about everything that happened this past week. Nike buys Artifact. There's a whole madness going on with Cyberkongz, the NFT project. And another NFT project, Cool Cats, is creating different tokens in order to facilitate different aspects and add more utility to kind of their ecospace. So, as always, Tommy and we are not financial advisors. And you shouldn't take anything we say as financial advice. But what you should do is listen to this coming episode. So first, state of the market. As you guys know, we're in a bit of a downturn in the market. Everything is down still, but it's less down than before because everything is correcting upwards slightly and slowly. And there's a lot of uncertainty in the market. Bitcoin is down like 5% on a 7-day basis, but on a 24-hour, it's up 2.5%. Ethereum is down 12%. Binance Coin is down 10%. Cardano 10%, Solana 10%. You kind of get the idea. But on an interesting note, Dogecoin is up 12% after Elon Musk pumped it in an interview, saying that it's a better currency than Bitcoin because it facilitates payments better, which is an interesting take. But I think if you're a Coinmarketcap user, yesterday you were extremely bullish on the market because there was a glitch which made everyone a billionaire a few times over. I remember seeing something like Bitcoin, the market cap being a few thousand trillion. So very interesting times we live in. Unfortunately, that wasn't the truth, but bullish news nonetheless. And in these times, sometimes a bit of this serotonin is nice. So let's get into it. Nike buys Artifact. Tommy, what is Artifact? And what is Nike?
Well, Nike is a huge sports giant, in the world, and Artifact is one of their most recent acquisitions. And Artifact is, it's a company, a crypto native company making virtual sneakers and collectibles, and their real objective is merging realities in fashion and gaming.
Mm-hmm.
And they're working to create a whole ecosystem for their community that's focused on high-end avatars and creating a metaverse of their own. And this is they've recently got acquired by Nike. Their sneakers apparently were going for $10,000 a pair before this happened. So that's interesting. Yeah. So this has been making waves because Nike is obviously a huge company, and it's also just one more thing in a trend of bigger brands jumping into the metaverse and the NFT space and crypto blockchain in general. So it's really interesting to see a company like Nike taking this step and what that could mean for the space. And there's obviously been loads of different reactions. But what do you think, Elias?
Yeah, I don't know. I think it's interesting that even though there's a major dip going on and the markets are very uncertain, a lot of these big brands are still getting in, and they're getting in right now as if there's no time to waste.
They're buying the dip.
They are buying the dip in a way, right? Because
Yeah.
this is what we said, I think, a few episodes ago. It's much more sustainable for development to really pump money into these projects when the building blocks like the ETH and these kinds of things you need to deploy smart contracts to build on the blockchain are cheap. So it's very interesting to see Nike getting in.
Mm-hmm.
I do think that in this kind of perspective of metaversification and 3D worlds, that high-end avatars and branded, what do you call it, attributes,
Mm-hmm.
so like shoes and that kind of stuff will become relevant. I don't know how relevant, but I do think it's an interesting development.
Yeah. I think it's interesting to see how they'll approach this and how much influence they'll have in sort of influencing the direction of Artifact. I think a big one, which is, so it's going to be interesting to see what they do. But there's now this debate, obviously, of whether Web3 projects, NFT projects, and these companies, crypto native companies, whether they should allow themselves to be tainted by the old guard, Web2, and vestiges of an older world that we're trying to move away from. And I think that's a real interesting debate to have, because it's interesting to see a corporate take on crypto and the space, and whether they'll embrace crypto native principles, or whether they'll try to bring their old way of doing things. Like, are we going to see a Nike metaverse where these NFTs are able to be used in this metaverse, but then they're not going to be able to be used in other metaverses, and kind of changes what it means to own something. And NFTs are generally about ownership.
Yeah.
And so it'll be interesting to see what kind of take that they make. And I think it's all a big experiment, because different brands are jumping in, and they're all
Mhm.
going to have their own take at it, because these are all tools ultimately. So they're going to have an objective, and these are just tools for them to reach their objective. And it's going to be interesting to see how they actually roll that out.
Maybe also relevant. This week I read a bunch of stuff also on Medium. I don't know if you know, there's like this publishing thing called Coinmarketcap, and
Mm-hmm.
there's a lot of guys who speculate, and there were a few guys who had a Twitter Spaces. I forget their names right now. If I remember them, I'll put the link in the description. What they basically discussed was that the majority share of the crypto market right now, the liquidity that's in it, is being maintained by institutional investors. And this is kind of a diversification strategy, because a
Mm-hmm.
lot of these institutional investors, like Nike, they're very Web2 companies in their core. Yeah, they're a shoe company, but the majority of their sales happen in an online ecosystem. They have this entire Web2 mentality of, we are the platform, people come to us. What these people were saying is, yeah, about 60% of the market right now, the liquidity is taken up by these companies, but they should be buying way more, as in they're not realizing the full potential yet. Yes, they have much
Mm-hmm.
more money, but if they would have actually found this
Yeah.
space as relevant, the retail investor would have been 2% of the market, and the institutional
Yeah.
investor would have been 98.
Exactly, and seasoned veterans in the space also see that. I think that that despite how significant it might seem that Nike is acquiring a NFT native project, we're still early. We're still early, because if institutions, companies, and these big players really wanted to come in, space would look very different,
Yeah.
very different, and it might look like what CoinMarketCap looked like last night.
Yeah, that is actually. I remember. I remember just telling you, like, I thought the Rothschilds bought into the crypto market with the amount of liquidity we saw last time. But
Exactly.
it was interesting, because it's almost like it gave you a little glimpse into maybe like 20
Hmm.
years into the future, seeing like these prices and this kind of. I mean, it was a bit of a ridiculous
Yeah, it was
price
mad.
point we were working with, but maybe with hyperinflation,
Mhm.
then these dollar prices would make sense.
Exactly, and whichever approach, I think all these approaches actually will just coexist.
Yeah,
We like to talk about, like, oh, whether things are going to stay crypto native, or whether web 2 is going to come do their thing, and but they're still using web 3 tools. So are there any, so I think all these approaches will just coexist, and people will be able to choose what they want to interact with. Like, we've spoken about this before, about like the spectrum of engagement, in with crypto, whether there's going to be a spectrum of engagement where people have different degrees of comfort, how comfortable they are holding their own keys and being that sovereign over their funds. And there'll be products that service everyone. So I think it'll be the same in the metaverse, where people just go where their principles and values align most. And
true.
if
But
that's more decentralized ownership, more crypto native, then you're going to focus on those projects that really care about that as well. But there's definitely just going to be room for the Nikes. There's going to be room for the Disneys. There's going to be those brands,
yeah,
and it's cool. Everyone's
and
going to have a space.
yeah, and exactly what you're saying right now is what I read when Adidas bought into the metaverse.
Hmm.
Uh, if you go to kind of the announcement post, the Facebook Meta account
Yeah.
tweeted to them and said, "Hey, congrats!" And a lot of people were very negative. We don't want a
Right.
gate-kept metaverse, blah blah blah. But
Right.
one comment stood out to me, and it was a guy who said, "You guys really think there's just going to be one metaverse, so that
Yeah.
it's all going to be one thing?" He said, "No." Basically, he went on a rant. This thing is buried somewhere. There's like 3 likes
Sure.
on it. He went on a rant. He said, Meta might be the Solana metaverse. You know, the idea of a Solana like metaverse. Oh, there's 20 servers. They're all owned by Zuck. And it's not decentralized at all, but people might want to use it because it's quick, cheap, easy, whatever. But it will still have to be linked to other metaverses that are
Yeah.
fully decentralized. And that's what we're seeing right now with a lot of NFT projects also going off on their own kind of route,
Hmm.
not per se letting Web 2 based companies or
Or
these
VCs and that. Yeah.
VCs. Yeah, and we see that with Cool Cats, right?
Hmm.
They're basically doing an ICO, creating different tokens of their own.
I don't know if you'd call it ICO, because the purpose of it is not to fundraise or anything. It's just, added utility.
That's true. I mean, there is of course a financial value attached to
Well,
those tokens
yeah,
in the end of the day. But I
true.
mean, at the end of the day, it's like they're not relying on these traditional
Yes.
companies, on these Web 2 companies, for
Mhm.
them to garner this
Mhm.
this economic weight.
Mhm.
So, what do you think about that? Because we see Cyberkongz doing all kinds of stuff. We see Cool Cats
Yeah.
creating these tokens.
I think it's interesting to see how projects take different, uh, different approaches to this, to this space in general, where Cyberkong has gone for VC funding, which has enabled them to, grow their community more so, in terms of, as well, providing them with more utility, and that's been enabled through this, this raise that they've done. But we see projects like Cool Cat taking a different tact, choosing to stay more, community owned, decentralized, and less VC backed, and creating an ecosystem through these two tokens, which, they've added to their ecosystem in order to create more utility for their holders. So one token is going to be free flowing token that they can use in their ecosystem, and the other token is actually one that will be used in the game and also is produced through ownership of this token. So that so the idea is that there'll be token gated events for community members of this, which already exists in various places. But then this gives opportunities for other people to then be able to access these events. So it opens up their community a lot more, while also rewarding those that are who are early supporters, who are holders of the cat. It gives more value to those NFTs to begin with. And I think it's two projects being enabled in two different ways through two different approaches, and they're both still crypto native. And it's interesting to see, and it's great to see that these companies are able to grow in their separate approaches.
Yeah,
Like Cool Cats is able to do a madness, with their approach. Cyberkong is making waves, and it's both are good for the space. That's what
yeah,
I think is positive. But I think what's cool about Cool Cats is that we're moving away from this you know financial system determined by the nation states and central banks and that, but to having little silos and different communities you can jump between, where there's a whole ecosystem, a financial ecosystem at that,
yeah.
where you can operate in, where you can get a lot of value from, but you can also give a lot of value. It's usually a give and take type of thing, I feel, in this
Sure,
space. But
I agree.
I think that's a very cool development.
I think the entire move to Web3 and to crypto is, in its core, it's wanting choice
Hmm.
in your financial management, in
Yeah.
your asset management, and not having to rely on these centralized and these policymakers
Yeah.
and these decentralized banks. Indeed, I think, of course, decentralization is to a certain extent a core feature of that. But I think the main quest of the space is to enable choice for its users. And I think that's exactly what you see happen here. Some companies go with the full TradFi, um, Nike, big brands approach. Some go with venture capital backing. and some just really go from the ground up, or at least from their community up, building community, enabling for tokens, and via that adding value to their own projects. And I think that's exactly in spirit with what the crypto space should be, a place with lots of opportunities and a place with without these restrictive centralized services. And I think that's what you should take into account. A lot of people critique these projects for getting venture capital backed or for using centralized features. I don't know. I think the beauty of it is, as long as you have a choice, this space works for you. Keep that in mind whenever you interact with the crypto space, whenever you interact with these projects, whenever you think about these projects. And also keep that in mind whenever you tune in again to the next episode of the Block Exploring podcast on Monday. We'll see you then. Peace.
Take it easy.